Okay, nobody said 2. Okay, good. Everybody said 1, and I agree with that. So my answer is also 1. Purely statistical analysis. I don't have statistical analysis, trading psychology, right? Nothing has really changed. It's just months of January, right? I mean, if in February inflation is again hotter than expected, right, and we have still economic data, potentially 2 can occur. I mean, it's not off the table, but if I have to guess, I would put 60% confidence that we're going to get to 1. And here's 40%. Not a lot of conviction. I don't have a lot of conviction because this doesn't look good, right? This doesn't look good. Everything is in red. But I still think we did, the bottom line that bulls were able to break the downtrend, which I didn't expect. They were able to break the downtrend. There is still a high probability of soft landing, right? The narrative hasn't changed. Unemployment is low, consumers are spending, manufacturing data came in better than expected, services data came in better than expected. There's some movement in mortgages, right? Even though now it's on pause, but at least for the past 2 months, we had some movements in, housing activity. So, I mean, soft landing is not off the table, right? 1 month doesn't throw off the entire picture, right? So for that reason, I think it's 1. Obviously, if February, if March, we still have this inflationary data going up, and all of a sudden Fed decides to raise by 50 basis points, well, then it's 2, right? Then it will be 2. I don't think that's going to happen. I think bulls are still in control, and they will be able to defend 200-day moving average and 50-day moving average. For that reason, I'm voting 1. Not a lot of conviction. I mean, you can see how does it affect my portfolio rebalancing? I am proposed to be market neutral right now. My proposed market neutral. To me, this means that you should not, on average, you should have 4 positions. You have 2 bullish positions, right, and 2 bearish. And you can see even today, I'm closing some of my bearish positions today, right? And probably by the end of the day, I'm going to add to my bullish positions, right? Because I think market is oversold. So in the past 2 weeks, I went from being bearish to being more and more market neutral. For every 2 bullish position to bearish, because I think we can get to 420 or at least 410 very quickly. I also realized that 200-day moving average might not hold, and we can get to 380 also very quickly, right? By end of next week, we will have the answer 1 or 2 by end of next week. If Friday we are below 380, right, then okay, it's 2, right? And if Friday we're above 200-day moving average, well, then it's 1. Right, very important level. So that's fine, 1 or 2 March, that's kind of makes sense. Let's talk about a little bit further, right? Now with 3 months, let's talk about September. I'm going to talk about September. All right, soft landing narrative, we are going to at least get to August high or even higher, right? So this is a soft landing narrative, right? By September, we're at 1. Meaning inflation is going down. This is just a misprint, right? 1 data point doesn't make sense. And then starting March, April, inflation continues to go down, unemployment continues to stay low, manufacturing data continues to expand, and people continue to travel and, reserve Airbnb and soft landing, right? Soft landing scenario 1, we're somewhere between 440, 450, and 430. Scenario 2, 1 month we have inflation going up, 1 month we have inflation going down, and we're basically trading somewhere between 350, right? 52-week low, right? Still soft landing, but not as soft as everybody anticipates, and between 430, right? Or up, down, up, down, up, down, up, down, right? Scenario number 2. So this is maybe a soft landing dash no landing. This is maybe soft landing slash hard landing. We're still fighting, nobody knows, right? There is no signs of inflation, right? There is no signs of recession, right? If Q1 earnings come in April and they're similar to Q4, right, where there's really no clear cut right? There's no evidence of recession, right? Right now, there is no evidence of recession. There are some forward-looking indicators that might indicate, or like inverted yield that usually follows, or leading indicators for 10 months aren't down. So there are signs that recession might be coming, but there is no signs that recession is here, right? So then we're stuck in this soft landing, hard landing narrative between 430 and 350. And the third scenario, we are breaking below, right? Hard landing, meaning that we do have a recession, and there's signs of earnings recession, right? Next time when Apple and Microsoft report earnings, it's going to be worse than Q4, right? Q4 was pretty bad, but market kind of dismissed that. But in Q1, it's going to be even worse than Q4. And then if there's a signs of recession, more people are letting go, margins compression, high wages, and blah, 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 recession, all right, recession. So scenario 1, 2, and 3, by the months of, let's say, September, October. How many of you say 1, no landing? How many of you say 2? Well, no, nobody knows, right? We're just going to be stuck in this range with mixed data points, right? Like we had in January, February. Right? December was one of the worst months. January was one of the best months. Now February is again one of the worst months, and we're just going to continue having these worst, best, right? That's 2. And scenario 3 is, there'll be more bad data than there'll be good data in terms of recession. Scenario 1, 2, and 3. Let's pose that question to the team.